Good morning and welcome to Broker Briefing, Australia's premier digital platform, live streaming video presentations from ASX-listed companies. I'm Jane Morgan and thank you for joining me today. Today we are joined by four companies: Security Matters, Locality Planning Energy, Orcoda and RooLife Group. Up first, we have a presentation from Security Matters with the ticker code SMX, a company digitizing physical objects on the blockchain. To tell us more, today we are joined by founder and CEO, Haggai Alon. Over to you, Haggai.
Thank you. Thank you very much for the opportunity. Security Matters SMX is about the ability to mark, track, and trace any kind of material. We can do it from raw material to production, from production to commercial, and from commercial, what was until now a nice to have, and now becomes an essential, to the waste. That brings the capability to help companies to move from linear to circular production, which is what's called the Industry 5.0 challenge. I would like to share with you a very short movie relating to what we do with the fashion industry. Bear with me.
SMX's solution to the sustainable equilibrium economy for the fashion and textile industry using IoT2 digital twin blockchain. What if there was a way of reusing each fiber and material of the garment? The fibers of fabrics come from various natural or synthetic sources. Using SMX technology, companies will be able to invisibly mark, trace, and store data on the actual raw materials, fibers, at a molecular level from the original source across the entire life cycle. Security Matters technology enables a drop-in, unique, and invisible solution for marking natural and synthetic fibers. Which is inscribed to SMX's blockchain platform to create a trusted bridge between physical and digital world. From fiber to yarn to fabric. SMX Equilibrium Economy enables to manage the balance between virgin material and used or recycled material, creating a sustainable supply chain management and reducing dramatically the carbon footprint. Garments can be recycled back to raw materials to be used in other industries. From fiber to fabric, SMX technology provides supply chain transparency, brand liability, and re-entering the economy for reuse and recycling. Improve recycling rate by efficient sorting process of marked blended fabrics with accurate raw materials identification and composition. Security Matters breakthrough technology is the global standard and best practice for recording and
So as you can see, and in relation to our last announcement, which is the fact that we are the first company in the world that can mark organic cotton from seed to plant to fabric. This is part of our Fashion Sustainability Center that enables fashion brands to be able to provide their client conscious fashion and garments and clothes that can be reused. We can do the same for rubber, as we announced. Rubber is a critical material for conveyor belts, for tires, for machinery, and we have announced this quarter about the first project in the world from natural plantation in Asia to factories in Europe. and to enable both the ethical part of tracking the origin of the rubber and being able to implement our markers that can be in solid, liquid, and gas phases into the final product. So the rubber product can be recycled and reused. So what you can see through the achievement of this quarter is the large support of our founding shareholders. We have managed to do a placement of $5.3 million, and we are very cash stable well into next year, more than a year from now, and commercial developments that put us in a place when we are practically the leading technology on transforming linear to circular production. Electronics, gold, rubber, plastic, and everything related to the fashion industry. To you, Jane.
Thank you for the great presentation, Haggai. We've had a question come through from a Twitter attendee. So the quarterly mentioned that the conveyor belt detector system is now ready for commercial rollout. So how long do you expect it to take to find partners for this? And when do you expect the first revenue?
We expect the first revenue towards the end of the year. And this conveyor belt online unit is critical because what it really symbols is the fact that we're able to give a full service from marking the virgin material, marking the product, to marking and sorting at recovery and waste management, so we can give the brands, the global brands, a full service. And here comes our patent. We launched the first patent in the world that on one hand certifies plastic recycled content at waste level, gives it a grade, and with the grade, the type of polymer, the type of application, the data of the waste, of the plastic waste, it can be reused in higher percentage. And this is all linked to a digital token that can be a tradable asset on the stock exchange. So what we really have is that we're transforming the plastic waste to a plastic credit that can be traded on the stock exchange. So waste will be a financial asset. This is where SMX is going.
Oh, thank you. Well, sorry, thank you for joining us, Haggai. So a copy of today's presentation will be available online on brokerbriefing.com in the coming days.
Thank you very much.
So next up, we have a presentation from Locality Planning Energy with the ticker code LPE. To tell us more about the company's rapidly growing electricity business, today we are joined by non-executive chairman, Justin Pettit. Good morning, Justin.
Hi, Jane. How are you?
Good, thank you.
Thanks for having us on. And thank you, everyone, for listening. You got the slide there, or do I?
Nope, I'm just bringing it up for you now.
Perfect.
Thanks, Justin.
So LP, we're a fast-growing electricity provider. So anyone who lives in Queensland and New South Wales and are not using LPE as their provider, you should check us out. We're the first to market, we have a first to market technology with regards to our shared solar. Actually, there you go, perfect. We're first to market with regards to technology for our shared solar for apartment living. And also our carbon neutral centralized hot water systems, which I'll talk a little bit about. I'm sorry, can you go 2 slides, Jane? Yeah, that's it. We're currently selling electricity, hot water, solar, and battery systems in Queensland and New South Wales. And we predominantly, a large part of our customer base is based around the strata communities. Could you just go to the next slide, please? We're the 6th largest provider in Queensland on the Energex network. So only 1.2% of the market, but as you can see, there's a lot of room and growth for us to move in. And we're getting a lot of inbound calls now from customers wanting to join LPE. Next slide. As far as the size of the market, the electricity market, particularly in our part of the world, is huge. Not only is $13 billion a year used or consumed in electricity, but in the strata market, which is an area that we're experts in, around just under $1 billion a year. So that's massive. And for us to be able to bring products to this part of the market has been extraordinary and very well taken. Next slide, thanks. I'll just go through our main products. Embedded networks. So for those who don't understand embedded networks, if you take an apartment building, every apartment faces the grid or the network separately, typically, and they all pay their own network charges along with energy charges. What we do is we put 1 meter in between. We aggregate everybody together, and we put 1 meter in between all the customers or in the apartments and the grid. And that meter is a business meter. So there's a significant reduction in network charges. Instead of having 100 network charges, we have 1, and we distribute those savings to the end customer. So from a customer perspective, there's really no change. They get a bill from their energy provider, which is us. They get treated as an individual. They're not aggregated. They're aggregated from a metering perspective, but certainly not from an end customer perspective. Next slide. Our flagship project that we're really rolling out aggressively now that we've got network approval is shared solar. Again, those living in apartments haven't had the same opportunities that people living in homes or single dwellings have had, and benefiting off solar energy. We've come up with a way to develop building scale solar systems. So we put as big as solar system we can on the roof. It goes through a single inverter, and then it goes through a proprietary diverter that's made by Loom Energy. So we're the only ones in Australia, or Loom are the only ones who are making and developed this diverter, which will divert solar electricity in real time to apartments and customers in an apartment building. So we have the exclusive rights to supply and install that Loom product, the diverter, in Queensland and New South Wales for the next 2 years. So it's a great solution. The end customer gets to access solar electricity during the day. They get to save a little money on their electricity costs. We make a better margin. The body corporate are happy, and the grid's happy. So it really is a triple win. Next slide. Centralized hot water is also a big part of what we do. Again, in apartment buildings or business or commercial. We're heating the hot water with solar energy during the day and distributing that hot water at night. So a lot of our systems are 100% off grid and thus carbon neutral. So using solar energy to heat that hot water. And of course, we do retail electricity supply, homes, businesses, all through Queensland and New South Wales. And that's a very fast growing part of our business as well. As far as our past, I've got a couple of slides talking about customer growth and financials, but you can see here since we listed in 2016, our growth has been quite good, around 30% per annum in customer growth year on year. We set a target of 10,000 customers last financial year, and we achieved and exceeded that target. Next slide. But most importantly, we've had our maiden profit. So whilst customer base has been growing, revenues have been growing. And as you can see on the left there, compared to last year, if I was to put up all the revenue numbers, you'll be able to find a presentation on the ASX on our website. But revenue growth has been strong. Operating costs have been more or less low or levelized. And because of our conservative stance on wholesale energy hedging, we've been able to turn a profit this year. So everything's starting to go in the right direction, and revenue's growing and customer base is growing. As far as the investor opportunity, it's important to point out that even with all of this good news financially, there's still a great opportunity for investors. If I take our market cap or our EV today and also take the value of a customer, we're trading at about a 32% discount to the value of a customer. So our EV is about $8 million less than what our breakup value, I suppose you look at it. So this is just purely based on customers. doesn't take into account the future growth and of course shared solar. Next slide. Our growth strategy moving forward, we really want to build on the FY21. We have 300 shared solar systems that we're looking to deploy throughout the financial year. And it really does overcome apartment living's greatest barrier to solar electricity, who accesses the roof and who pays for the capital up front. So we do pay for the capital up front, and we enter into a long-term 15-year contract with the building, and we recover that capital over time. So from an end customer's perspective, they get their electricity bill. There's a line item for grid electricity. There's a line item for solar electricity that they bought during the month. So it really is a well-received product. Centralized hot water is also something that we're aggressively rolling out. And along with embedded networks, that really is our spine of the company. And we're seeing a lot of, not only are we working with a lot of developers, but we're also seeing a lot of existing embedded networks that are being managed by the body corporate or a billing agent coming across to LPE for a lot better experience. We handle everything, and we're also an energy retailer, so we can supply all of the grid needs, particularly, let's go to the next slide, particularly as a lot of those embedded customers move out of embedded networks into homes or apartments that aren't embedded. So we have around 6,000 customers a year moving out of our embedded network buildings. So we want to capture those customers as retail clients. So really there's nothing in the electricity space that we can't supply, whether it be grid, solar, and or batteries. Next slide there. Here's a corporate snapshot. So really tight capital structure. Damien and myself founded the company back in 2013 and listed it in 2016, and we still own a quarter of the company. We hit our guidance last year of 10,000 customers. The financial gains on FY21 compared to FY20 have been fantastic. So we're really at an inflection point. I see over the next year or two, we're certainly poised to begin to deliver those sustainable and year-on-year earnings back to the market. And of course, the board of directors, the company really is run by our CEO and CFO. They do a fantastic job, Damien and Mel, of running the company. And we look forward to updating investors as we go through this next financial year. Thank you, Jane.
Thank you, Justin. Thanks for the presentation. We've had a webinar attendee just come through. So in terms of growth, is the company solely focused on organic growth within its existing business units, or is LPE also looking at acquisition?
We'll look at acquisitions, but probably to answer the question, it is organic growth. We have sales teams in place and very strong body corporate relationships that we leverage on. But we are open to acquisitions. It's always tricky when you get to that stage and talking about value. But yeah, we're open to acquisitions, but we're focused on organic growth.
Perfect. Well, thanks for joining, Justin. And of course, copy of the presentation will be available on brokerbriefing.com in the coming days.
Thank you.
So next up, we are joined by Jeff Jamieson, Managing Director of Orcoda Limited, with the ticker code OGA, to tell us more about their diversified transport logistics and transport services business. I will now hand you to Jeff. Good morning, Jeff.
Good morning, Jane. How are you?
Good. Let me pull up your presentation.
Thank you. So, Jane, if you could just go to the next, that's it. Thank you. So just a update on our FY21 financial year highlights. Obviously, 8.91 mil in consolidated revenue for the year. With Better, for the whole year, it was about 12.7 million, but we could only bring to account Better from when we purchased it in December. So next year, full year will include Better. Our revenue increased from the same time FY20 by 415%, and we delivered a 1.08 million EBITDA, which was a great result for the year. The March quarter was great. We had 3.78 million in consolidated revenue, a 34% increase on the quarter before, and we ended up at 2.47 million cash at bank, which was a great result, and that came about as being cash flow positive again for the quarter. That's 4 quarters in a row now we've been cash flow positive. Jane, if you could go to the next slide. And you can see there that we've increased our revenue substantially quarter by quarter. So 3.78 million last quarter, as I just stated. And next quarter, with Mount Buller kicking in, providing we don't go into lockdown again, the Mount Buller revenue is very good for us at the moment, and will be for the total snow season. So the next quarter is looking very, very positive, and we should see growth over and above the last quarter again. Next slide, Jane, if you could. Just our market cap at the moment is around $24 million, and we've got a well-defined strategy for growth by 3 things: cross-selling across each of our divisions, and also by growing through accretive acquisitions, which we've completed Better, as I just said, and we are then going into another acquisition that we are in due diligence on at the moment. So hope to announce that in the near future. Next slide, Jane, if you could. So we've got 3 divisions: our Orcoda Resource Logistics division, our Orcoda Transport Logistics, and our Orcoda Healthcare Logistics. So basically, our whole mantra is around being a transport logistics and a transport services provider. So anything to do with people on assets and or the infrastructure that they travel on, be it road, rail or air, that's what we're involved in as a company. So we generate our main revenues in resource logistics at the moment, where we manage assets and the passengers that travel in those assets for energy companies, mining companies, and major infrastructure projects. We utilise our technology platform to make us best in class at managing those passenger movements. And Mount Buller is a good example of that, in that I think we've transported in excess of 100,000 people since the season started. And we've also done projects where we've had up to 2,500 people or 5,000 people movements a day. So we've done some substantial contracts and are good at managing those sorts of things. And obviously the acquisition of Better that fitted into the Resource Logistics division, because that is involved in road, rail and air infrastructure, that has added substantially to our income, in both revenue and profit, since that come on board. Our transport division, Orcoda Transport Logistics, does mainly SaaS and develops the software for all of our asset and people management. So that division licenses the SaaS platform out to people like major trucking companies, major transport companies. In the healthcare logistics division, we generate our revenue there from utilising our technology to manage large fleets of vehicles and ensure that those vehicles and the workers that operate them and that the managers, the people that travel in them are all managed through the one system. And the good part about our technology platform is that it does scheduled transport, and it also does on demand, which is quite unique. I don't think there's many others out there in the marketplace where they've got a platform that does both. And across those three divisions, then we cross-sell, and we've got accretive acquisitions that we are doing for each of those divisions to grow. So that is strong from our management perspective. We've got a great board, great management team with significant experience in transport logistics, in finance, in banking, in a lot of areas that are required, and you'll see that when I go to the next slide. So Jane, could you just go to the next slide? So Nick Johansson is our chairman, great legal background. He's got his own law firm in the Northern Territory and is very experienced in the resource sector in the Northern Territory. And myself as MD and CFO, I've been managing director or CFO of multiple ASX listed public companies and have got a great background in merchant banking, mergers and acquisitions, and capital raising. Also got good experience in accountancy and legal. Jeff Williams, who is executive director, he's our GM for Better, and Jeff's had great experience, come out of Ergon Energy and then started his own business 15 years ago and grown it into a major force in central Queensland. Brendan Mason is a non-executive director. He's chairman of our REM committee, and he's ex-Caterpillar, ex-Cochlear and Boral. Brendan ran the 200 vehicles that whole division for Boral, so very experienced in transport. And then Stephen Pronk, our non-executive director, he's started AIMLab, which is his own company, which is in healthcare. And Stephen's been responsible for some great introductions into that sector for us. And then we've got our operational management team. Simon has huge experience in rail in the UK and major projects. He was responsible for managing the HR on one of the big tunnel projects in Brisbane. So that Warren Preston, Warren's heads up our resource logistics division, GM of that. He's a ex-chartered from a chartered accountancy firm, got great skills. Grant Boydell, he's Chief Technology Officer and GM of Transport Logistics. Obviously, they go in hand because of the development of software, and Grant does a great job of managing that whole division. And then Sean Hardman. Sean's obviously ex-Wallaby, played for Australia, well known, and he's our GM for sales and marketing. So as you can see, very, very strong team, and we've got very, very good employees that they manage, so really good. Just a quick overview. We've got our logistics technologies that we, as I said, we sell as either a SaaS platform or utilise those platforms ourselves to make us best in class at managing projects. We've got our infrastructure services. That's all done in the resource logistics division, and we've got some very, very large projects there that we're managing at the moment. Some of our clients there are Horizon, Energex, Ergon, and and the list goes on. So I think Zimfer is one of our clients as well. And to bring all of our technology platforms together, one of the biggest problems that we've faced out there in the marketplace is interconnectivity. With obviously, when you don't have good 5G connection or internet connection, everyone blames your technology and not the platform, not the internet going down. So as we're in transport and as we are out there in remote areas a lot, we've decided to develop smart pole technology to try and get interconnectivity out into the areas that have got very little connectivity at the moment, or black spots. And there's huge black spots all around Australia at the moment, which really affects our ability to remain connected, even though all of our technology is native to devices. So as soon as they come back into an internet area, we still get the download of all the info. But the world is changing. The future for smart highways is in front of us, and the future will all be about interconnectivity. So and that's not just on road; it's in road, rail, and air. So interconnectivity and our smart pole technology, I believe, is going to play a major role in helping us grow our whole business model into the future. And some of those smarts that we've got in there are AI, IoT, ML. ML's machine learning, for those that don't know, and AR is augmented reality, virtual reality. So our poles will have cameras, smart lighting, full internet connectivity with the telcos. So deliver for us total digital connection into what we believe is a digital revolution that's facing business today. And then obviously we've got our acquisitions, and we intend to grow substantially through acquisitions that are accretive to each of our divisions. Jane, if you could go to the next slide.
Thanks, Jeff. I'll just also give you the heads up. We've only got a couple more minutes left.
Okay, I'll finish off. Yep. So if you just go quickly to the next slide. You can see there very good customer base, some of Australia's largest companies. If you click to the next slide, Jane. I've probably gone through our vehicle management. We do aged and disability transport. So we're out there with our product with a lot of the not-for-profits and for-profits in that sector. We also manage our own fleet of vehicles in that sector, and we're seeing revenue increase every month at the moment. Obviously, that sector got smashed fairly hard with COVID. But if you go to the next slide, Jane. Obviously, with our transport division, it's all about SaaS and software development. We've got a great software development team. They are all based here in Australia, and all of our clients like that we're Australian, where all of our people are based in Australia, and we're delivering a technology platform within our business, which is great for customers, instant service. If you could go on to the next one, Jane. So our resource logistics, that's about technology, fleet management and contracting. We've got some large contracts. Mount Buller, for instance, is a 9-year contract, very large, and a lot of people to transport that. And then we've got Better, that's got some very, very good contracts. Better can deliver our smart poles for us as well. So, and you can see by the revenue there that that's generating 6.5 million. We're growing as we speak. So if you can go to the next slide, Jane. Our software, we've got a software system that manages the total supply chain for mining and oil and gas projects. Everyone can read this at their leisure, but our system interconnects a total supply chain and delivers real-time information which is very unique, and when you're transporting large workforces to remote sites. Next slide, Jane. So you can see there some of the clients that Better has got, and they're going to play a major role in the rollout of our smart poles as we move forward, and being energy and interconnectivity are the main things that we need to roll out there. Next slide, Jane. So some of the projects that Better's worked on with Wesfarmers, Horizon, Spotless, you can see there that major customers, major projects, and they are all in road, rail and air. Next slide. And again, our smart poles will have smart cameras, smart lighting, all interconnected into our technology platforms. Totally for road monitoring, road maintenance, traffic monitoring, traffic maintenance, rail, same works on rail signalling. You'll eventually have wireless charging when autonomous vehicles come into the marketplace. And that smart pole marketplace is growing substantially. It was 30 billion in 2020, and it is growing substantially. So next slide, Jane. So that's about it from me. If there's any questions, I'm very happy to answer them.
Well, thank you for that, Jeff. Unfortunately, we have run out of time, but as Jeff did mention, the presentation has been lodged on the ASX and the contact details are at the back of that release. So feel free to send through any questions and we'll get back to you. Thank you for joining us, Jeff.
Thank you, Jane. Thank you very much.
Okay, and next up, we have a presentation from Brian Carr, the Managing Director of RooLife Group, with the ticker code RLG. I will now hand you over to Brian for more on the digital marketing and e-commerce services.
Thank you, Jane.
Good morning. Let me bring up your presentation.
Thank you, and thanks for the opportunity to present RLG and our business to a new group of investors. Is that presentation up on the screen?
There we go. Sorry, a bit slow today.
Thank you. Yeah, so next slide, please. Yeah, so by way of introduction, we are a digital marketing e-commerce business, and I think as a side effect or a consequence of COVID is most people now are aware of e-commerce, and that's a growing market, and it's nowhere bigger than in China. And that's our strong focus, is that we're matching two-sided demand. So we've got 925 million online shoppers in China, all looking for international products. And we've also got brands globally looking to sell their products into a market they can't travel to right now. And that's what we provide as a solution. Next slide, please. Yeah, so one of the things that we've done is that we've become a global provider. Whilst we're an Australian-based company, over 80% of our sales and revenue into China come from countries outside Australia. So we're now servicing brands from North America, South America, Europe, New Zealand, into that very big market of China. Next slide, please. Just a bit of corporate information there, so a summary of our business. So roughly 18 million market cap. Just finished our full year revenue of about just under $10 million, so 9.6, and a very strong Q4, so about $3.9 million revenue in Q4. So if you look at those sort of numbers with $5 million cash at bank, we're very well positioned to continue our growth. And so currently trading on an annualized rate of just over 1x revenue. So we think we're a very good, strong investment opportunity as well. Next slide, please. Just to give a bit of a snapshot of what our business consists of. So our revenue drivers come from the provision of services. So we have a team of digital marketers and online service providers, both here in Australia and in China. So the provision of services and digital marketing is a sort of a recurring annuity revenue stream for us that we collect each month. We also have a variable component of product sales. And that becomes a full end-to-end solution for any brand or company seeking to enter into the Chinese market. As I mentioned, many global brands have seen a downturn in their domestic sales. They've seen the growth opportunity in China, but they're unable to travel to China. So we've seen really good, strong growth across our business over the last 2.5 years. So that's manifesting itself from those services, digital marketing, and now product sales. And you can see that strong growth achieved from FY19 through to FY21. Next slide, please. When we say e-commerce and digital marketing, explaining a little bit more about that, it's a multi-channel approach to market and to consumers in China. Social e-commerce is a very strong and established way of selling products now into China. So we manage and operate a range of live streamers, so people presenting products to shoppers online who are buying in real time. We're then providing the ability to purchase those products across multiple platforms. In parallel, we're also establishing ways to market in multi-channels through our B2B distribution network as well. So multiple channels and ways to market, multiple ways to actually promote products to the matching demographic of a particular product that we're promoting. Next slide, please. As touched on there are many, many ways that people are accessing products and information within China. It's a very sophisticated, mature online market. Our abilities and our strengths lie in being able to be Western facing to global brands looking to enter into the market, looking for a trusted partner, but then also having the ability and understanding of the very sophisticated online shopping space in China. And that's where we match a particular product with a matching demographic. So that's one of the key elements that we provide as a point of differentiation. Next slide, please. Some of the opportunities that and the partnerships that we have put us in a very strong position. I'm sure everyone's heard of Alibaba and Alipay. That is one of the key methods that we use to collect transactions, payments from our client base in China and to settle payment into whatever jurisdiction our brands are located in. So a very powerful partnership, a very strong endorsement for the work that we do. And in fact, what we've highlighted there is a case study from Forbes magazine highlighting the work that we've done for one of our international clients, a brand out of the US, and our affiliation with Alibaba. So once again, good endorsement both from our partner and also from one of our clients. Next slide, please. Highlighting across here is that what we see as one of our key strengths as well is that we provide multi-jurisdictional and multi-product exposure into the very strong and still rapidly growing Chinese market. Our focus is on a couple of really key sectors: health and well-being. One of the consequences of COVID has been an even accelerated perspective on health and well-being. And we find that we're representing a number of pharmaceutical companies taking their products into China, health products, health and well-being, and food, high quality food growth areas. So across there, you see that a range of different types of brands, different product types, and also from around the globe. So we think we've got a very diverse exposure into this really strong, growing Chinese market. Next slide, please. What does it actually mean in terms of what does it look like? So when we're presenting an online store to shoppers in China, we build out the full online platform and the social media component. The examples you're seeing on there are a cosmetic brand out of the US, a cosmetic or a hair shampoo out of the UK, and 2 New Zealand listed pharmaceutical companies. So when consumers are buying those products in China, they're buying them exclusively from RLG. So we are the exclusive distributor and source for those products into China. Next slide, please. What we also have is real-time technology platform that gives us information about trends in sales, what products are in demand, what prices are being achieved, and we provide a conduit or a means to understand what products are being sought and searched for in China. And we also match those with our supply network so that we can be responding in real time to the demands in market. And that's an important aspect to consider as well. Next slide, please. I think that what you're seeing in terms of the revenue profile and the revenue growth that's being achieved by RLG over the last 18 months to 2 years is a consequence of the brands that we're taking into China, the products that we're taking into China, reaching a level of maturity. Our first phase of introducing a product or brand into China is building out the online profile, the awareness, the client base, the positioning, and that then moves into a phase where we're testing various ways to reach the optimal way of engaging with clients and to drive sales. That happens over the next 3 to 6 months. And so now what you're seeing is a maturing set of brands and products available via RLG directly into the market. And that's now starting to drive strongly the growth and revenue that we're seeing. Next slide, please. Very good last quarter for RLG. So as I said, rounding out with a third consecutive record revenue quarter, a very strong finish to the financial year for us. So up 180% on the previous year. Very strong cash receipts and collections. So we collected $5.5 million in cash receipts in the June quarter. And that meant that we had a positive net cash flow of $1.35 million. And rounding out the end of the quarter, end of the year, and into the first week in July in FY22, a very strong balance sheet with $5.5 million cash at bank. So as you can see, we're achieving very strong growth, but we're also well positioned to continue that growth. Next slide, please. So just in summarizing, the positioning for RLG is that we're in a very strong growth sector. E-commerce is booming. We also know that China is growing, the economy is growing and recovering faster than anywhere else in the world. We also know that brands from around the world want to access those growth markets. RLG has all the infrastructure to support and drive sales for brands into that Chinese market. We've been able to demonstrate that the platforms and systems that we have in place work. We've taken the revenue from $700K in FY19 to just under $10 million, and we are still expecting to continue that strong growth, and it's supported by the strong balance sheet that we have. So thank you very much for your time, and I hope that's given you an insight into RLG and the business that we operate.
Well, thank you for that, Brian. Oops. Thank you for the presentation. We've had a few questions, so I'll jump into them. So well done with the revenue growth. Do you expect this to continue during the current year?
Yes, we do. So look, that's evidenced by the maturing of the platforms and the products that we're bringing into market. We do have good visibility of what we expect to achieve, and so our expectation is to continue that growth.
And so just on the company's strategy, is it the company's strategy focused solely on China, or are you considering entering other Asian markets?
Yes, so we are looking at other markets. I said, look, we've got good brand knowledge and we've also got good client footprint across those jurisdictions. So the natural extension for that is obviously for us to cross-sell and cross-promote those products into each of those jurisdictions. So that's something we are exploring.
Well, thank you, Brian. As a shareholder, I'm looking forward to seeing further updates. That's all we have time for today, but thank you for joining us.
Thank you very much.
And thank you all for joining us today for Broker Briefing's investor webinar. Recordings of today's presentations will be available online in the coming days on brokerbriefing.com. We look forward to hosting you again soon.